Now let's talk about choosing the right operating partner.
Mm-hmm.
Make sure you are aligned. Okay. What I say aligned, what do I mean? I mean, market knowledge and presence. Herve is a market hunter, right? Herve, would you do business with a syndicator who was not sure where Albuquerque, New Mexico is, but they tell you that they got a deal in Albuquerque, right?
No, absolutely not. Right.
Of course not.
Just wouldn't touch it. Right. Exactly.
Right.
Yeah.
You got to make sure that syndicator or the property manager or whoever has market knowledge. If you're buying a turnkey, ask the property manager in that market, like, hey man, send me a market report. Send me your median rents that you guys are getting, that you guys are achieving that market now. Send me a couple of deals you've done in the past. If they're like, oh yeah, we're doing turnkeys, but we don't have any deals yet in that market, or we haven't expanded into that market yet, but we're going to start offering you opportunities. You never want to be somebody's experiment. You want to be somebody's 9th deal, not their first. Right?
I'll tell you something else, Matt. Based off how the contract's written in regards to you being the lender, how are you going to get paid back, right? One of 2 ways for you to get paid back from the person that you're lending your funds to. They're giving you the collateral and they put your name on the insurance. One, you can get those interest payments back, given back to you on a monthly basis. For example, if it's a 6-month loan. Or 2, you can get your entire interest paid to you at the end of 6 months.
Hey, man, you're getting ahead of me, you know that?
Oh, my bad.
You thought that was the only bullet? Why are you being impatient?
What do you guys?
I got more.
All right, let's step it up then. Let's go. What do you got?
All right, I got you. Asset class, right? Make sure you are comfortable. There's a lot of debates that happen in the multifamily world on whether or not brand new construction A-class real estate's better than C-class real estate, workforce housing. That's what we do, workforce housing stuff. But if you want something that just feels a little bit different, it's maybe something that's a little more bougie or looking or whatever, you might want to invest in an A-class property, or you might want to invest in something like, if you believe that self-storage is the way to wealth, or that America is going to come roaring back on industrial or something like that, or that there's a big opportunity in retail. Whatever your belief is and your market research is, you want to invest with an operator that believes in that also, right? They gotta be investing in a market that you believe in, or a market that you understand and that you think is good, and also a market they're knowledgeable on, and an asset class that's going to align with your goals and where you want to go. They gotta be able to serve your goals, right? So if I'm doing a private loan, I'll give you an example. I have a private loan going right now. I lent somebody money out of a home equity line of credit on my house, right? And by the way, guys watching, a HELOC is a phenomenal vehicle. If you guys own your home and don't have even a small HELOC on your property, it's a phenomenal way to open up the door. And so I have a HELOC Herve, not afraid to say it. I'm paying 3.5% interest on the HELOC. I got that money on the street now, I'm making 12.
Woo, giddy up, baby.
You believe that?
That's
so I'm making an 8.5% yield spread.
That's right. Right.
Not bad.
Not bad at all.
Let me ask a question. Since I got a monthly payment to make, don't I want a monthly payment from the borrower?
Absolutely.
Yeah, you better believe it.
Right.
I mean, I could bridge it, but I don't want to do that. I want them to make me a monthly check every month. Right. Every month. Right. Set my watch to it, like clockwork. ACH in my account.
There you go.
You know why? Because the ACH comes in and the bank takes their auto payment off. Right.
That's right. That's right. And you keep the spread.
And so that is an easy allocation for somebody to do. But if I'm lending with my IRA, whole nother angle. If Herve lends me money with an IRA, he puts $100K into one of my deals as a private loan, right? I don't care if he pays me monthly or not, because he's going to pay me at the end. I'm okay. And I'm okay giving him the privilege to pay me taking the privilege to pay him at the very, very end of the deal. And I might be willing to pay a little more interest in exchange for the right to pay the entire loan off at the end, including all the interest. We would always try and do that for IRA providers.
Matt, I got a question for you on this one.
Please.
Right? Look, it could be a little tricky. So if the person loaning you the money, if he or she is okay with getting their entire interest paid back to them in the form of a lump sum payment at the end of that 6-month contract, right? So now you'll have that borrower tell them, hey, listen, I'll pay you if it's all right with you, right? And you can charge me even a little bit of a higher interest rate, 7% instead of 6, or 11 instead of 10, kind of a thing.
You try and get a 1 to 2% bump. I mean,
you get a 1 to 2% bump, but
1 to 2% for payments at the end. Yeah,
you'll have that borrower also tell you, once I sell the property, then I'll be able to go ahead and pay you back. Now you need to have that operator, that borrower, really understand the market to a next level, understanding the ARV, understanding the comps of the market. You better be able to sell, because now me getting paid back what I loaned you is based on your ability to sell what you just renovated.
Yep.
Right? Versus when I was getting the monthly payments from you, it didn't really matter because I'm getting monthly payments from you. But if I'm waiting towards the end, now I have to pray, cross my fingers, you're successful in selling the property in whatever time frame, right? Because we got to take that into consideration as well.
Yeah, you take it all in consideration too. And it all has to go back to your ability to serve your goals and your risk factors that you're willing to tolerate, right? To Herve's point, maybe I can make a 25% return lending onto a private loan in Detroit, but I might not be willing to take on that risk factor in exchange for me betting on Detroit as a market, right?
Right. Exactly.
Okay. Company values, our company values to transform lives through real estate, and DeRosa Group point out, guys, DeRosa Group will not do a deal if we can't show ourselves and show our investors that the deal that we're doing has some sort of a life factor benefit for people, right? That we're not making the world a better place. Not to get too fuzzy, but one of our core values is to contribute to society, make the world a better place. Now, we're not a not-for-profit, right? We are certainly for-profit, and we aim to make money, and we do that. But we will make money in places where we can make a difference also. And it's important to note that, because some people might not have that as one of their core values or something they want to be a part of. And that's okay, because we might not choose a deal that's profitable, but it's clear it does not provide jobs to anybody, does not provide tenant benefit. We're not going to just buy something, do nothing to it, and hope the market goes up. And there's plenty of that going on, but that's not us. We're going to go in and gut it and turn it back around and make the tenants' experience better, make their lives better, and then also make money for our investors too. It's important to make sure the company values that you're in align with what you're now, not to go preach here, but let's just say you're concerned about the environment. Well, you might not want to be investing in a coal mine. Okay. That's going to be pumping, coal gas and coal, stuff into the air. Right. Make sure it aligns with the values you have. Okay. Now read this book, Heads Off Investor. My buddy Brian Burke wrote this book. There are 72 questions at the end of this book. Now, Herve and I have had investors photocopy the last 72 questions. Say, hey, answer all these for me. Well, maybe we'll answer the top 10 or something like that. But they're all great questions to ask a syndicator. And this book is really about being a passive. It's not about being an accredited investor. It's about what it is if you want to be a real full-time passive investor and be in the Robert Kiyosaki I quadrant of investing. This is the script, right? And so check out that book, and a little plug from my man, Brian.